How's it going, everyone? And welcome back to the channel. And today we have a very special guest, which is Vinnie from Vault Digital Funds. And today we're going to talk to him about what funds that they provide and hopefully answer some of the questions that you may have about the digital fund itself. So Vinnie, if you're able to just introduce yourself a little bit to our audience.
Sure, absolutely. Thanks, Henk. Thanks for inviting me on the show. I'm Vinnie Gardiner. I'm the CEO and co-founder of Vault Digital Funds. This is an idea that was born about in discussion with CEO and co-founder of Easycrypto, Vinnie Gardiner. So, our business partner in this venture.
Okay. So how long have the fund existed?
Sure. So the concept of Vault Digital was born last year in 2020, and we began the company earlier this year, 2021. But our first fund offering was launched on the Invest Now website on 4th of October.
Okay. So it's a fairly recent fund.
Very, yeah. Yes.
Now, would you be able to help me understand and our viewers what exactly is the fund invested in?
Sure. So, So the fund is the Vault International Bitcoin Fund is the first fund that we've brought to market. So what that does is we just from the outset, we're not trying to reinvent any wheels here. We're aware, obviously, of some Bitcoin ETFs and funds that are operating in the market, and we're seeking to take advantage of New Zealand's tax structure and to give another demographic, another market segment easy access to Bitcoin. So the way we've done that is we've set up a regulated fund in New Zealand, the Vault International Bitcoin Fund, which in turn purchases shares in offshore listed Bitcoin funds and ETFs.
Okay, so from what I've seen in the disclosure statements, that a lot of funds that are listed are actually Canadian yes. funds. Would that be right?
Yes, they are. I mean, the Canadians seem to have sort of led the way in many ways in getting ETFs to market. And having said that, a couple of those ETFs are actually relatively new to 2021 as well. So it's a very embryonic market in many ways, actually.
Yeah. So I've researched a little bit about that a lot of the Canadian ETFs actually hold some of the Bitcoin itself, whereas a lot of the US ones don't actually hold Bitcoin itself, but instead hold Bitcoin futures. Now, Can you tell or describe what's the difference between them?
Sure. And the Vault International Bitcoin Fund, I'll just state from the outset, we are only looking to invest in Bitcoin funds and ETFs that actually hold the underlying Bitcoin in cold storage. Whereas the recent Bitcoin futures ETF that listed, I think it was 19th of October, that is a futures contract that doesn't actually hold any Bitcoin specifically. And by definition, the way that the futures contract works, there will be a premium over time. There'll be a premium associated with getting access to Bitcoin through that methodology, and it's reasonably well documented that is more of less of a retail investment product, probably more of a trader's type of product, actually.
Okay, so. One of the things that does come up is regarding the diversity of these funds. So are these funds currently holding just Bitcoin, or are they holding any other cryptocurrency, or is there any plans to kind of diversify into like different cryptocurrencies out there? Sure.
And yeah, good question, Henk. And it's a good one to unpack as well. So this is solely a Bitcoin fund. So we're not seeking to diversify away from Bitcoin exposure in this particular fund. But what we are seeking to do is, as I mentioned, the market itself is very embryonic and it's changing, and it's changing rapidly. So what we are seeking to do is only invest in Bitcoin funds and ETFs with Bitcoin exposure in cold custody, but nothing else. But what we are seeking to diversify, and there's several reasons for this, we're seeking to get some diversification in terms of the ETFs and in return the underlying custodians that they use. So there's several reasons for that, Henk, and I'm happy to sort of mention what they are. There's obviously different fee structures involved. Or there are different fee structures involved in the underlying funds, which do impact the headline rate for the Vault International Fund. So the underlying funds range from 0.95% per annum up to 2% per annum. And also the liquidity of these funds can range dramatically. One of the funds is less than $500,000 globally. And one of the funds was, I think, today in excess of $700 million globally. So we're seeking to ensure that we can offer our wholesale and retail investors, from the New Zealand point of view, sufficient liquidity in the market, but also get a blended rate of the underlying funds, as well as diversifying in terms of not being beholden to the US market, not being beholden to the Canadian market, and not being beholden to any individual fund or ETF or underlying custodian. So I know there's a lot of information there.
Yeah.
But that's the multifaceted reason why we've taken that approach.
Right. So let's say if someone were to invest in this particular fund, like how easy it is would be for them to actually get their money back out. Like, is there enough liquidity that, you like, if I want to take my money out in a day or two, is that something that I can do?
Absolutely, yes. And that's what we're ensuring, throughout the whole process. And in terms of you can buy one day and you can actually put an order in to sell the following day. Once you're set up and you're ready to go. So it's very quick. It's not as liquid, admittedly, and you don't have the flexibility of a 365 24/7 market like Bitcoin. We're talking about a different market offering here, but liquidity is at the top of our minds, and also, meeting the average investor's liquidity is not a problem here, but we are seeking to attract very large investors as well, and we need to ensure that they are also catered for within the fund.
Okay, yeah. So the other thing that quite often comes up as well is to do with the tax issue, and what are the tax implications of holding and owning this particular fund?
No, absolutely, and what we've done, Henk, is because the direct comparison really is with holding Bitcoin directly, and any gains you make on holding Bitcoin directly, you will pay capital gains tax on. So, and just to clarify a point in your previous video, there are no capital gains on increases in units in the Vault International Bitcoin Fund. So there is, however, because of the way we've structured it, which is purchasing offshore listed shares, we're taxed under, as you correctly identified, we're taxed under the fair dividend rate rules. Which means that you will in effect pay a maximum of 28% on a 5% deemed dividend, which equates to a maximum tax rate of 1.4% per annum.
Yeah. So sorry, carry on.
Yeah, so we see, look, that is, but what that does do, the maximum tax rate on capital gains in New Zealand is going to be 39% on your Bitcoin exposure. But with units in the fund, you will pay the 1.4% per annum maximum, but you won't need to pay up to the top capital gains tax rate of 39%.
Yeah, so that was one of the things that I am not too sure about, which according to the IRD website, right, they consider cryptocurrency as not a long-term asset. So you're basically paying gains on any form of cryptocurrency if you have the plan on disposing of them. And because cryptocurrency is not really like a company that pays dividends. So how does that actually work, like when you're holding a fund? Because like it's kind of comparing it to holding like gold, for example, which is again like you'll get taxed on any sort of gains that you get if you sell your gold in the future as well. So what makes it different that you are not needing to pay the gains on the fund?
Well, this is the critical thing, Henk, is that because we're purchasing shares in offshore listed companies, we're taxed under that FDR regime, and it will not be subject to capital gains, and that is the reason we've done it that way. Clearly our accountants have been all over, and legal team have been all over that as well. So, that is the current tax legislation in New Zealand, and that's what we've applied in this instance. And that is, by the way, I should hasten to add, that is no different to many other funds in New Zealand, and who follow the same methodology. So, and also there's plenty of instances where, there's no in the foreseeable future, there's no anticipated dividend to come out of a VC type share or what have you. There's plenty of instances of that, and of course this is and I'll just mention back to the 1.4% tax rate per annum. So obviously you have to take into account what your time frame looks like. You have to take into account clearly the fees of investing in the fund and the FD, the 1.4% tax per annum, but having no capital gains tax when you do decide to sell. You need to compare those things, and also that you're not having to learn and undertake self-custody or have custody on an exchange. And there are risks around those. So you need to take into account all of that versus going to buy from an exchange, either keeping it on exchange or keeping it in your own digital or hard wallet. And also the fees that are associated with purchasing those with Bitcoin, exit fees from any digital wallet, and also sales fees when you're actually selling. So there's a lot of things to take into account. I appreciate, Henk, that the Vault Digital Funds offering is not for everyone. Similarly, the self-custody model is also not for everyone. There's a lot of people who, scratch their heads. It's just too much to take in. So we're trying to cater for those people who are very, very interested in Bitcoin exposure, but really don't know where to start.
Okay, so let's say if we compare to like buying and holding Bitcoin yourself, sure. Like what are the pros and cons of each? Like, say, if we want to compare the two.
Yeah, absolutely. And this is a critical question, because I mean, my own experience. Look, I've been in digital assets, I like to call them, and crypto for some time. I actually had some assets on Cryptopia when that was hacked. So I've had first-hand experience of having some loss there. I'm also aware of people who have lost their digital wallets, and through either just accident or just poor self-custody practices. So there are risks around that type of custody. So it's not for everyone. I get the self-custody model. That is I use that myself. I also invest through the Vault funds. There are reasons for both. So the other side of it, Henk, and what we're finding in the marketplace as well is, as I mentioned, there's a lot of people who are looking to get Bitcoin exposure, put off entirely by the self-custody model, put off by going to an offshore exchange, which is their only other option at the moment. So Easycrypto a self-custody model, or they go off overseas and take the risk of leaving their assets on an exchange. And they just don't want to go there. But they do want considered exposure to Bitcoin. And in actual fact, what we're hearing in the marketplace is that there are wealth advisors out there who are getting daily requests from clients, but they have no vehicle to point them towards. And so they haven't, they've had all these other channels available to them, but they haven't taken advantage of them because they're a bit lost in terms of what to do. But to be able to, for a wealth advisor, to be able to say, hey, look, you're seeking to get exposure to Bitcoin, and obviously Bitcoin is very volatile. It may or may not be for many people, but if people are intent on getting Bitcoin exposure, then a regulated fund model may well be better alternative for some investors, and that's what we're trying to cater for.
Mm-hmm. So let's say if you were to go on a foreign exchange and purchase like these digital currencies,
yes.
What are the tax implications of that? Do you know?
The tax implications? Well,
the tax in terms of taxes, like if you when you convert it back.
Sure. So I mean, and this is highlighted everywhere. But let's just say you were to go purchase through Easycrypto, for instance, and you purchased let's say $1,000 worth of Bitcoin, and you sold it at some point in the future, and it went to, for argument's sake, I'm not suggesting this is where things will go, but for argument's sake, it went to $2,000. You made $1,000 gain on your investment, and you would need to pay tax on at your marginal tax rate for that $1,000 gain. So and obviously, and there will be fees on the way in to the transaction. Also, if you need to store, I mean, the good practice if you're self-custodying is that you store on a hard wallet, and there is a cost associated with that hard wallet. Henk, a nano ledger is in the region of $140, I want to say. A Tracer is in the region of $270. Really, best practice, you should have two. So, it's quite a significant outlay to self-custody well, to do it the right way. You can store your Bitcoin in that instance on a digital wallet. Now, you could download a digital wallet like an Exodus or what have you. There will be fees on the way out of Exodus, and obviously you if you don't store not obviously, but if you don't store your backup phrase well, and you lose that, and you lose your phone, which has actually recently happened to my brother, you lose the whole lot. Okay.
Yeah.
So there are real risks, and I guess it's not until you experience those things firsthand that you realise what a risk that is. Now, there was I don't know if you want to share this with your viewers, but back in October, there was a recent break-in at an Auckland property where the guy had $4 million worth of cryptocurrency self-custody in his safe. Okay. So really bad idea.
Yeah.
But that's gone. It's all gone. So just these things do happen. I'm not trying to be alarmist here, but these things do actually occur. And it's just something people need to be cognizant of when they're weighing up, self-custody versus exchange versus a fund. And I think there's different reasons for different types of investors to invest in different things. So it really is on a case-by-case basis. I mean, you're catering Henk to the 20 to 35-year-olds. I get that. I get the self-custody model. That's I also began. But Vault is about democratizing access to these digital assets. That's what drives us. And so, to my mind, there's many people who've been put off by that self-custody model, but they will be interested in a fund.
Yeah. So considering the risk factor that exchanges can be hacked into or things can be stolen,
Sure.
what are the insurances that like this fund provides? Like, do you get an insurance by holding this?
Sure. No, Vault in and of itself doesn't provide insurance on the underlying fund products, but I will point out that this isn't about. In terms of the process flows, it's a regulated investment fund. We do have all of the investors' cash is aggregated by a New Zealand regulated custodian, Adminis, so they hold the funds. We then go and Vault then has the investment discretion to go and purchase the underlying Bitcoin ETFs and funds, which at the shares in which are in turn held back by Adminis, the New Zealand regulated custodian. So, that is a standard fund model that most parties will use in the New Zealand fund space. So that is a tried and tested model that many are familiar with. So in terms of the shares themselves that we're purchasing, they are listed on the Toronto Stock Exchange in many instances, and they are all in excess of $500 million to $1 billion on the Toronto Stock Exchange. There's three in particular that we focus on there at the moment, and Grayscale in the States, which I know you'll be wanting to talk about, Henk. Grayscale in the States. They're in excess of 30, I think it's 35 billion US as of today. All of these in turn hold the underlying Bitcoin in cold storage. That means it's offline. So there's a dedicated there's a process that needs to be undertaken to actually physically extract that Bitcoin out of cold storage, as directed by those funds and ETFs. So and each of those custodians and that is spread across custodians. Each of them have varying degrees of insurance on the underlying Bitcoin. So there's a lot in there to unpack, but there is a method, there's a reason why we've done it this way.
Okay. So I guess one other question is relating to the fees for the particular fund.
Sure.
So the fees for the fund as it currently stands was about, I think it was like 2.5%.
Correct.
With like 0.25% spread in and out.
Yes.
I have to say it seems pretty high, to be honest.
Okay.
Considering the fact that this is not really a mutual fund, for example, it's not really actively trading, buying and selling these things to make a profit.
Sure.
So where is exactly the fees coming from?
Yeah, absolutely. And look, and that's at the top of everyone's mind, of course, as it is mine. And so the biggest contributor to the 2.5% Vault fee is the cost of the underlying funds that we're purchasing. So we're in effect disclosing the total fee structure to the client. That is what, as a regulated fund, that's what we need to do. So the cost of those underlying funds ranges from 0.95% per annum right up to 2% per annum. So we excuse me, we've got a blended average of all those excuse me, we've got a blended average of all those fees, and then the Vault element of that 2.5% is on top of that. So the benefit to that is that the custody element is taken care of for you. So you don't need to go and buy a Trezor or a Nano and or self-custody and the risk that entails, or go on an exchange and the risk that entails. That is sort of taken care of for you in the background. And also there's up to 39% tax saving on capital gains as well. So yeah, it's the 2.5. We in terms of Volt's outlook, we want to be as competitive as possible. It is a relatively high fee in relation to some other funds, but in relation to growth funds, it is comparable to many. And again, just to reiterate, the main driver of that cost is the cost of the underlying funds which we purchase on behalf of investors. So
okay, yeah, okay. So I guess the last thing that I just want to ask today is what do you think about the future of these digital currency assets?
Yeah, and this sort of harks back to the reason why we're looking at funds. What I do see is I see payment rails increasing. MasterCard. Looking to adopt the technology. Visa, Square, PayPal, all onboarding with Bitcoin, to look to use Bitcoin technology. Adoption rates globally and from a broader crypto perspective have gone in the last year and a half in the region of 60 odd million to 200 odd million. Twitter just announced that they're going to allow Bitcoin payment rails to their, access to their 200 million odd users. Commonwealth Bank was just last week announcing that they're going to allow crypto trading to all of their 6.5 million or to their 6.5 million strong database. So, and again, just harking back to your previous point that the Bitcoin futures, now being released in the US. By the way, on the back of that, there are, I think there's 19 or 20 Bitcoin spot ETFs, the applications before the SEC at the moment. So what that sort of says to me is that, and by the way, Grayscale is one of those Bitcoin spot ETFs now. So that by spot ETF, what that means is effectively that's what Volt invests in. Those are Bitcoin ETFs that actually physically hold the underlying Bitcoin in cold storage. So very different to the futures ETF. So what I see is a limited supply, but demand increasing. And we don't know if or when the SEC will, of course, allow a Bitcoin spot ETF to launch. But I think that we'll see a lot more retail interest in the US as a result of that type of event, because in retail investors, that's the mom and pop investors in the US, cannot currently easily access a Bitcoin ETF. So they really do have to go digging for it. So we're sort of cognizant of all of this happening globally, and we felt that speed to market was one of the reasons we went down this route. We could see what was happening globally. In terms of getting something out to Kiwi investors that they can relate to, that they're comfortable with. That's a regulated New Zealand fund. We didn't need to reinvent the wheel here. It's packaged so that it's accessible to people who don't want to self-custody. That's where we're coming from. So, yeah, I think in summary, I think I see, demand is increasing. The price will still be incredibly volatile. And you need to position size and think very, very clearly about your timeframes. And this is best done with a financial advisor in play. So it's still, there's a lot of headwinds. As I mentioned before, there's a lot of headwinds for Bitcoin, but the regulators and on ramps seem to be seem to be softening, I guess, in their approach. There's no guarantees in that, but that's apparent with recent events, I think.
Yeah. I just thought of one small quick question.
Sure.
What is the relationship between the Vault Digital Funds and Easycrypto? Are they like kind of under the same umbrella, or are they a separate entity, or?
It is a separate entity, but Janine Granger, obviously CEO of Easycrypto, she is also a director of Vault, and yeah, look, she's clearly led the way in terms of getting crypto out to 156,000 Kiwis now, and you launched in several countries as well, and I think we both recognised, and part of our early discussions, we both recognised that this was happening, but also that there was a whole nother segment of the market that was intrigued and perhaps warming up to the concept of Bitcoin and digital assets, but it was just in the too hard basket, and they've either done nothing, or as unfortunately is often the case, Henk, is certainly a lot of more experienced investors, shall we say, in that older age category. That's probably an unfair statement, actually. But a lot of people are really put off by the technology aspects that they have to educate themselves with to be able to be comfortable with self-custody. Actually, I will point out, it's been very interesting with Invest Now, Henk, is that what we're seeing investors across the board. You're basically seeing a 50-50 split between investors under, not quite 50-50, but close enough to, investors under 45 and over 45. We're seeing it really spread across the demographics. So it sort of tells us that it really is opening the marketplace up to people who haven't yet taken the plunge into self-custody, and I think that's the critical point, right?
Yeah, and that's partly what I'm trying to do here as well, to just try to get information out for everyone out there. Yeah. So that's about it for today's Q&A session, and I want to thank Vinnie again for coming on to help us out with some answers about Vault Digital Funds. Thank you very much for coming on, and I will see you guys later.
My pleasure. Thank you, Henk. Thanks, everyone.